Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Investors await clues on how quickly the Fed will continue interest rate cuts, with a delayed U.S. jobs report now due Thursday. Saudi Arabia's Crown Prince Mohammed bin Salman is heading to the White House, his first high-stakes visit since 2017. Agreements on security, AI chips, and nuclear technology are high on the agenda. And China urges students to avoid traveling to Japan, citing what Beijing calls dangerous comments on Taiwan by Prime Minister Sanae Takaichi. Well, it's just gone 9 a.m. across the Emirates. I'm Johanna Versace in Dubai. The big news towards the end of last week was that the shutdown had ended, which means that slowly things are beginning to reopen again. U.S. airspace is reopening as of today. And then the data, the widely anticipated data, especially that BLS jobs report due from September, is actually going to come out on Thursday this week. So we are going to start getting more data. And then the other big event to watch out for in terms of earnings this week is NVIDIA, given all the talk around AI. So let's take a look at markets and how they are shaping up. A bit of a roller coaster session on Friday, lackluster, I would say, for Wall Street, a negative session for Europe. But today things are pointing up. S&P futures up 0.5%. You have 10-year yields in the U.S. at 4.14. Again, massive seesaw action on Friday. At one point, we got down to 4.05, 4.06. And then by the end of the day, we'd rebounded back again. So some strange activity going on in fixed income. This as investors still unsure about what the Fed are going to do in December. It seems as though the Fed committee themselves are pretty divided about where we go from here. There's only about 10 basis points worth of rate cuts priced in now for December. The USD gaining a bit of ground this morning, up 0.1%. Over the course of the last month, though, the Bloomberg USD is up 1%. So it is actually gaining some support, despite the drop that we've seen for most of this year. And then Bitcoin flagging this today because at one point over the weekend, we had fully erased the gains for 2025. And given how much focus there's been from the Trump administration on the crypto space, interesting to note that at one point it did actually dip into negative. We're now back to mildly positive again. Bitcoin just above $95,000, up 1.7% on the session. And switching over, one chart that I want to flag to you as well is we talk about some of the concerns swirling in AI space. Take a look at Oracle. This is a picture of their CDS spreads, i.e. credit spreads, and you can see steadily climbing over the course of the last couple of weeks. So back in September, 5-year CDS was trading at around 40, 50, and now we're double that at 100 basis points. This because they're making a huge push into AI, and investors perhaps a little bit skeptical about whether this is all going to pay off. The stock is down 25% in the last month as well. So this is just a picture of Oracle. But again, I think the big scene setter this week is going to be NVIDIA earnings on Wednesday. Okay, let's check in also on how markets in Asia are faring. Min Lo is in our Hong Kong studio. Some fireworks in Japan today. Min.
That's right. Well, we're seeing the mixed picture here across Asia. So first, you have the Kospi leading gains here. There's a story from Reuters about how Samsung is looking to hike prices by up to 60% on some of its chips. And that's giving a leg up for some of these AI names like SK Hynix, Samsung, TSMC. That's helping to lift the indexes here at the bottom. But we have Nikkei and the Hang Seng declining today. The big story, as you said, the diplomatic spat between the two countries. China issuing a travel advisory for its citizens not to travel to Japan over security concerns. And this is after the Prime Minister Sanae Takaichi mentioned that an attack on Taiwan could be construed as an existential crisis for Japan, giving it the legal justification to intervene militarily. And of course, the big impact of that reduction in Chinese travelers to Japan is going to be felt by some of these big retailers, right? Like Uniqlo, for example. You flip the board, you look at the department stores, Isetan down by 11%, Shiseido as well, close to 10% declines. And that's because some of these brands like Shiseido, it relies on its China market for about over 30% of its revenue. So when tourists do not come to Japan, they're going to feel the impact there. Jumana.
Wow, those are substantial declines. Thanks for flagging them to us. Min Lo in Hong Kong. Now, we're also hearing more pushback from the Federal Reserve over a potential rate cut in December. Expectations for cuts have been scaled back, with officials showing little conviction for reducing borrowing costs.
I've been able to get behind the last two cuts, and we'll see what happens for this next one. I still got a couple of weeks, right? So I don't. One thing I try to remind everyone, like, we are a data-driven body, right? So I want the information to guide where I think the appropriate policy should be.
I think it would be hard to support another rate cut unless we were to get convincing evidence that inflation is really coming down faster than my expectations, or that we were seeing more than the gradual cooling that we've been seeing in the labor market.
For more analysis, we're joined by Selena Ling, Chief Economist and Head of Global Markets Research and Strategy at OCBC Bank. Good morning to you, Selena. So the BLS report that was supposed to come out in September is now coming out on Thursday, so November 20th, a couple of months delayed. How much of a market mover do you think this jobs data is actually going to be, given how old the data is now?
Well, like you said, we are missing 2 months of data already. So I think the market reaction is going to be fairly skewed in one direction. If it's much weaker than expected, I think market will start to price in a higher probability of a December rate cut. If it's better than expected, people will say, well, we don't really know what happens during the US government shutdown. Things may have deteriorated since, so let's not put too much weight on that. So I think the risk really is skewed on one side. I think what's interesting is that if you look at market pricing, they are a little bit in a half mind about the December rate cut, but looking out further into 2026, they are still pricing in more than 3 cuts. It just means that the timing of the rate cut has shifted a little bit because of the pushback from some of the Fed speakers. They are not saying that the next move is not going to be a cut, even if the Fed stays on hold in December.
Yeah, I mean, even the Fed Chair Jerome Powell said that December is not a foregone conclusion. So let's see what the minutes say this week. We also have the Fed minutes to parse through as well. Why do you think so many Fed policymakers are sounding more hawkish over the last couple of weeks?
Well, I think it's quite understandable because even going into the last meeting, generally market was overly dovish already. They had already priced in 3 cuts this year and 3 cuts next year. So it was understandable that Fed Chair Powell had to push back a little bit. And since then, given that they are very much a data-dependent Fed going out from here and they are flying half blind, they don't have the numbers coming in because of the government shutdown. So a lot of it is up in the air. So it's not surprising, that they are kind of like very divided at this juncture. I think we have to live with this new world where, there's going to be a lot more dissension and division within the Fed officials themselves. And I think this is going to persist all the way out, probably even into the first half of next year, when we get some of the Fed official changes and also a new Fed chairman, for instance.
Yeah, and what is the House view at OCBC vis-a-vis what the Fed are going to actually do and how this will all manifest, given that there are new policymakers that are going to be joining the Fed next year?
Well, our House view is actually for one more cut in December. I think we will look quite carefully at the delayed spate of numbers that will be coming out this week from the US side, now that the government has reopened. I think if anything, probably we'll see that the direction of change will be leaning towards softness in both the consumption side and also on the inflation side and also on the labor market side. But even barring that, let's say if things still seems to be okay for now, the US economy is slowing, and I think it will show up increasingly in the next couple of months. And that will really open a door for, potentially another one more 25 basis point cut in the first quarter of next year. So we think that, probably 2 cuts from here.
Yeah. OK. What happens to the USD with that backdrop? Because at the top of the show, I was pointing out that the dollar has started to gain some support. In the last month, it's up 1% in an environment where the Fed are cautiously cutting interest rates. Does that lend more support to the USD?
Well, the dollar has gone through big moves this year. I mean, first half was very weak. We're kind of like in a range for the second half, and we saw some recent momentum. But I think a lot of that is also attributable to the volatility that we're seeing in the AI and the high-tech sector, in addition to the pushback on the Fed rate cut story. Like I said, the direction of change for the US economy, we think would still be a softer labor market going forward. We have not seen the full effects of the tariff on the inflation front, but assuming that that's going to be fairly moderate because of the burden sharing between, exporters to the US importers, and the end consumers in the US itself, we think that, even if we get a bump up in terms of the inflation from tariffs, the Fed is likely to look through this as somewhat transitory and place a little bit more priority on the softening labor market. So we do expect that if the September and the October non-farm numbers come in on the weaker side of things, the Fed would basically have the green light to continue to cut rates from here. That said, market expectations, like I mentioned earlier, is very dovish. They are still looking for at least 3 cuts from here out till the end of next year. So depending on how the data comes in the first half of next year, it could very well evolve again. And of course, because of these changes that we're going to get to the Fed officials and the chairmanship, we probably have to live with a very split, Fed composition and vote each time they meet. And I think market's going to be just watching the data from here.
Yeah, dissents are becoming a lot more frequent. Thank you, Selena Ling, Chief Economist at OCBC Bank. Thanks so much. Now for a look at some of the other stories we're following today. German Finance Minister Lars Klingbeil is headed to Asia, pushing for open rules-based trade as tensions rise between the US, China, and Europe. He will take part in the German-Chinese financial dialogue in Beijing, meet officials in Shanghai and Singapore, and press for fair competition along with better market access for German firms. Swedish buyout firm EQT says it's aiming to triple its Asia investments to as much as $110 billion over the next 5 years. That would outpace the firm's deployment in its home turf of Europe. The firm has returned 25 billion euros to its investors in the past 12 months, with Asia accounting for a sizable percentage of those exits. President Donald Trump says proposed Senate legislation to sanction countries conducting business with Russia would be, quote, okay with me. The bill would allow Trump to impose tariffs on imports from countries that buy Russian energy products and are not actively supporting Ukraine, targeting countries such as China and India. Trump also mentioned Iran may be added to the list.
Any country that does business with Russia will be very severely sanctioned. We may add Iran to the formula, yeah.
And coming up, we speak exclusively to the CEO of Riyadh Air, Tony Douglas, about the industry's trends, challenges, and outlook. We are live from the Dubai Airshow. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Let's turn to aviation now. And the Dubai Airshow kicks off today with the industry trying to meet high demand for travel, as well as facing disruptions caused by geopolitics, deadly crashes, and federal restrictions. So for a conversation about the trends, challenges, and the outlook, the opening trade anchor Guy Johnson is on the ground over here in Dubai and joins us now with a guest who has big ambitions for the Kingdom of Saudi Arabia. Guy.
Jumana, thank you very much indeed. Yes, welcome to the noisy flight line here at the Dubai Airshow. Our first interview of the day is with this guy, Tony Douglas, the CEO of Riyadh Air. You're the Gulf's newest carrier. You've started flight testing. You've got aircraft running in and out of London. The question that everybody wants the answer to, Tony, is when do we see the first commercial flight? Is it January next year? Is it February next year?
So Guy, Riyadh Air loves a good air show, and as you say, here we are in sunny Dubai, and on the 26th of October we were up and running with our first scheduled daily service to London Heathrow.
How's it going?
It's going really well, and of course this is a movie that was 3 years in the making.
Yep.
From when we received a decree from His Royal Highness the Crown Prince Mohammed bin Salman. 26th of October was that really important milestone, up and running, commercial services.
Yep.
And you know what? It feels good.
Paying passengers?
So the paying passengers, what we deliberately introduced was a pathway to perfect. What does that mean? It's allowing members of PIF, our shareholder, it's a really big company,
yep.
So their employees plus their family members and their friends to be able to buy tickets on our scheduled services.
Yep.
What does that mean? Almost like you are putting a great big resort online, you can test absolutely everything.
Right.
So soon we'll put Dubai on as well.
Right, so you're in the testing phase right now. When does the testing phase come to an end and the rest of us get to have a go and see what it's like? So is that the beginning of next year?
So first of all, I can't wait to serve you and the people who are watching this at 38,000 feet. Our first new delivery aircraft is finished, completely finished, is now in the certification process in Boeing in Charleston, South Carolina. The second aircraft is in the paint shop. It's got the seats inside. The third new aircraft is currently going into the final assembly process. So they're all inbound, and we're very confident and frankly super excited that we'll be going live in the early part of next year.
You need 3 aircraft, don't you? You need 1 on each leg plus 1 if there's a problem.
So I'm targeting 3, but of course we've already got 1. We call her Jamila. So 2 new deliveries plus Jamila. Pathway to perfect. If I'm happy with everything else, it's all about an obsessional attention to detail with guest experience, then we'll be up and running.
In terms of what happens next, is it all about the availability of aircraft? Stephanie Pope, who runs the commercial side at Boeing, is here in Dubai. I'm assuming you're going to be seeing her. Is there any chance you're going to kind of up the cadence, get more 787s a little earlier, that you'll be able to ramp up and deliver more destinations more quickly than you originally, or maybe at the moment, thought about?
So Stephanie's been a great partner. Boeing have got better at getting better, and we've got 72 Boeing 787s, but that's part of a commitment of 182 aircraft that we've made in the last 2.5 years. And you're probably wondering as well why I've got a helicopter to my right with Riyadh Air on it as well, because we'll be making an announcement here today of a partnership with the helicopter company. It's another PIF company. This is all part of a broader air mobility strategy, which basically means going forward through our concierge app, if you want to then come into Riyadh and perhaps pick up with a helicopter, you can see what the Riyadh Air helicopter looks like, whether it's eVTOL or whether it's actually corporate jets. So it's a broader proposition of how we'll connect all of that through the concierge app.
You're also going to have a partnership with Hilton, which we understand you're going to announce here as well. The one that everybody's waiting for is India, a partnership in India. There's been talk about Indigo being a possible partner. Where are you in terms of that relationship?
So let me go perhaps back to Hilton first. We launched our loyalty program. It's called Sphere, and this is a completely new proposition. First time a commercial airline ever launched its loyalty program at the same time as it went live. And the idea of Sphere is I can connect, or you can connect, friends and family into your sphere. You can collect and therefore share points and tier levels by just tapping your phone and passing them on within your sphere, i.e. your friends and family. We'll announce today one of many great partner members to Sphere, which is Hilton. Doesn't get much better than that, but of course what that will mean is as a massive international hotel partner, they'll be part of the Sphere program as well.
India?
India is absolutely key. This part in the world, it goes without saying, the Indian subcontinent is a big part of the connecting flows. We've got 10 fantastic partners at the moment. Hold that thought. India for sure will end up being one of them as well.
Are you talking to everybody? When's it going to happen? Is it going to be this year?
So India is absolutely key. I'm not going to put an absolute time to it, but hold that thought. The 10 we've already got that we're very proud of, India will get added to that at some stage.
Okay, final kind of area to discuss. We're starting to see the US economy slowing. European carriers are talking about demand slowing down, certainly on the North Atlantic. Does that translate to here? What are you launching into in terms of demand environment?
So demand in this part of the world is still very strong. I think it's important that we always watch what's going on in other geographies. But I think, you know, take this city alone. Dubai, connecting into our home city, Riyadh, is probably one of the world's great fit routes. What do I mean by that? You try buying a ticket at the moment, you'll see that prices are high. Classic Keynesian economics. Demand is far higher than supply. So we see all the fundamentals still being strong, but let's stay eyes on.
You're not going to give me a date, are you, for that first commercial flight beginning of next year? January, February? Which is it? February is more likely?
I'm pretty confident that I'll be serving you, Guy, at 38,000 feet in the early part of next year.
Early part, what does early part mean?
Early part is obviously January, February and March, and I always like an early curve if I can get one.
Tony, great to see you. Thank you very much indeed for stopping by to see us. It's fantastic to see you. Tony Douglas, the CEO of Riyadh Air. Jumana, we've got some great interviews lined up. It's Boeing next. We've got a packed schedule throughout the next couple of days. I'll hand it back to you.
Well, Guy, I've got to say, I admire your persistence. I think we actually did get an answer out of Tony in the end and when they're going to open up to paying customers more broadly. Thank you so much. Really looking forward to your coverage throughout the rest of the day. Guy Johnson, anchor of the opening trade with the CEO of Riyadh Air at the Dubai Airshow. And coming up, S&P cites South Africa's improving economic outlook as it lifts the country's credit rating for the first time in 2 decades. More details later in the program. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Mohammed in Dubai. Well, the Middle East is about to get its first Six Flags entertainment theme park as Saudi Arabia prepares to open a new location on December 31st. The first location outside of North America, Six Flags Qiddiya City, will feature more than 24 rides, including the world's tallest and fastest roller coaster called Falcon's Flight. It will also be the first entertainment park of its kind in Saudi Arabia. And Saudi Arabia's sovereign wealth fund has exited positions in almost a dozen U.S.-listed stocks in the third quarter. That takes the value of the PIF's holdings in American equities to $19.4 billion, its lowest in almost a year. The exits come as the wealth fund sharpens its focus on domestic companies and prioritizes local investment to help drive the kingdom's economic diversification plans. And Bloomberg has learned that the Abu Dhabi Investment Authority, ADIA, is mulling a reduction of its stake in Qatari telco Ooredoo. The sovereign wealth fund owns 10%, which is worth around $1.26 billion. ADIA is weighing a plan to raise around $500 to $600 million with the sell-down. And billionaire Paul Singer's Elliott Investment Management is seeking a stake in Integrated Diagnostics Holding, a London-listed healthcare company that operates in the Middle East and Africa. IDH has entered into an agreement to buy private equity firm Actis GP's entire stake of just over 21% through a special purpose vehicle. The transaction is subject to regulatory approvals. And Israel's economy significantly accelerated in the third quarter, recovering from a plunge triggered by the 12-day war with Iran in June and ahead of the ceasefire in Gaza reached in mid-October. Seasonally adjusted GDP rose 12.4% year-on-year, which is well above the median estimate of 7.3% in a Bloomberg survey of 8 economists. Gross fixed capital formation led the rebound, followed by exports and private consumption. And equities are looking up as we head into another quite busy week of data with those jobs figures on Thursday and the Fed minutes to watch out for. But coming up, we're going to be speaking to Dalia Fahmy, Associate Professor of Political Science at Long Island University, on what's at stake as MBS heads to Washington. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Investors await clues on how quickly the Fed will continue interest rate cuts with a delayed U.S. jobs report now due on Thursday. Saudi Arabia's Crown Prince Mohammed bin Salman is heading to the White House, his first high-stakes visit since 2017. Agreements on security, AI chips, and nuclear technology are high on the agenda. And China urges students to avoid traveling to Japan, citing what Beijing calls dangerous comments on Taiwan by the Prime Minister Sanai Takaichi. Well, it's just gone 9:30 a.m. across the Emirates. I'm Johanna in Dubai. Well, we found out on Friday that the jobs data from September, by the way, it's a couple of months old, is going to come out on Thursday this week. So finally, we're going to start getting the official data releases from the U.S. And all of that plays into what the Fed are going to do in December. There's only about 10 basis points of rate cuts priced in now. And certainly the language we're getting out of policymakers has been a lot more hawkish as of late. This is your picture for where things are. S&P futures leaning towards more positive, up 0.4%. Also, keep an eye out for NVIDIA earnings on Wednesday. Our colleagues over in Asia, Mark Cudmore, just flagged that into the event, NVIDIA tends to do well. And after their earnings, it tends to underperform. So if history is a guide, buyer beware. Just something to watch out for as we head into Wednesday. 10-year yield sitting at 4.14. A bit of a roller coaster session on Friday. At one point, we got to 4.06, and then we recuperated some of those gains back to 4.14 again. The USD slightly firmer today, up 0.1%. We're about 1% firmer throughout the course of the month. And then Bitcoin, the reason I have this up here today is because over the course of the weekend, At one point, we fully wiped out the gains for the year. So Bitcoin was back to flat, i.e. negative. Now we're slightly more positive again on trading this morning, up 1.8%. But it does tell you that the crypto world is suffering a little bit in line with some of the skittishness that we're seeing in broader markets as well. And speaking of that skittishness, one stock that I want to draw your attention to today is Oracle. This one stood out to me because not only is Oracle's stock down 25% over the last month, but its CDS has more than doubled over the course of the last month and a half. So we've gone from about 50 to 100 basis points. Investors perhaps a little bit concerned at the speed and the pivot at which Oracle has shifted towards AI, huge spending plans, borrowing plans, and their ambitions to power some of the compute for OpenAI. So this is one of the big names in the AI space that people are watching out for. And certainly there's some credit worries as well with the CDS widening. Okay, let's also check in on how markets in Asia are faring today. Min Long is in our Hong Kong studio. Min, walk us through it.
Hi, Jomana. We are keeping an eye on Japanese markets in particular. You can see here the Nikkei is somewhat flat. It's already pared back some of the earlier losses, but the topics not faring so well. The yen as well on the weaker side of things at 154 levels. But China and Japan are now in a diplomatic spat over what Sanae Takeichi had said about Taiwan, saying that an attack on Taiwan could be an existential crisis for Japan, giving it the legal justification to intervene militarily. And China has retaliated by issuing a travel advisory for its people not to go to Japan. And we're seeing the immediate impact here on some of the big retailers in Japan. You look at the department stores. Chinese travelers love to shop there for the duty-free goods, and you're seeing 11% decline on Isetan. Pan Pacific International down 5%. Shiseido as well, 9% decline. And that's because this is a company that relies on at least 30% of its revenue from the China market. We're watching how things develop because it's serious enough for Japanese officials to travel to Beijing today to try to calm things down. And why this is significant, if you flip the board, you can see we're seeing a steady increase in Chinese travelers to Japan these days, back to pre-pandemic levels right now. And they make up nearly a quarter of Japan's foreign travelers. And bear in mind that Chinese travelers tend to be the biggest spenders, so they have a huge impact on travel spending for some of Japanese big travel and retail sectors. So something to keep an eye on as this develops over the week.
Yeah, for sure. Going to keep a close eye on how this diplomatic spat plays out. It's having a big impact on markets today. Min Lo in Hong Kong, thank you so much. Now, Saudi Arabia's Crown Prince Mohammed bin Salman is set to arrive in Washington to deepen ties between the U.S. and the kingdom. On the agenda, a list of agreements on security, AI chips, and nuclear technology. But the trip also comes at a time when Washington is seeking to expand the Abraham Accords, while Riyadh is insisting any normalization with Israel must be linked to progress towards a Palestinian state. Joining me now is Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Dalia, good morning to you, or good late evening to you. Clearly, normalization is on President Trump's mind. The question is whether the Crown Prince, Mohammed bin Salman, thinks it's the right time to go down that route. What's your perspective?
So this is going to be the Crown Prince's first visit and return to the United States since his last trip, which unfortunately was overshadowed by the death of Jamal Khashoggi. But since then, the ties between the U.S. and MBS and Saudi Arabia have increased and really recovered significantly. If you recall, when President Trump returned to office in January, his first trip was to Riyadh, where he announced a $600 billion Saudi investment in the United States. Now, President Trump has not been subtle about what he wants from MBS in this trip, which is to see Saudi Arabia normalize relations with Israel and to enter and be part of the reinvigoration of the Abraham Accords. But the Crown Prince has been clear that there won't be negotiation on this unless he sees and is this leads to an actual recognition of Palestinian statehood. So this time around, the Crown Prince finds himself in a very different position where perhaps the Saudis have a larger bargaining chip to play here because President Trump actually needs him.
Okay, so let me just ask you about the bargaining chip perspective, because Axios were reporting this morning that the U.S. may be willing to sell Saudi Arabia F-35s, and we know that Israel is the only country in the region that actually has the F-35s. But however, in exchange for eventual talks on normalization. How far do you think the Crown Prince, Mohammed bin Salman, would be willing to go if it meant that they'd be able to boost up their own defense?
So there's a couple of things that are really important to President Trump and both to MBS, which is the acknowledgement that Saudi Arabia's recent defense pact with Pakistan underlines that Riyadh is actually moving in a position where it can leverage what it wants and what it needs from countries like Russia and China. And they're expanding their influence in the region. So Washington really needs to keep Saudi Arabia close in its fold. And so there is a leverage that MBS comes in to the United States with. And again, the negotiations on things like artificial intelligence and mining and earth minerals that the U.S. needs from Saudi Arabia also put him in a different position. Now, remember, the Saudi Public Investment Fund has become one of the world's most active sovereign investors, especially in the United States. And these are things that matter to President Trump. And so he'll be willing to give the Crown Prince what he wants in the name of normalization, because it's also tied to these economic and political deals that President Trump needs from MBS.
Yeah, what do you think are the deliverables that the Crown Prince himself is looking for? Is it a beefed up security deal? Is it cooperation on civil nuclear plans as well? That's something that they've been working on for many years as well, going all the way back to the Biden administration. And what would be deemed a success for the Crown Prince?
It'll be the nuclear plans. It'll be the negotiation on security. It'll be the fighter jets, but it'll also be the positionality of Saudi Arabia returning to the fold as the major player, bargaining player in the region. If you recall, since the 80s, Saudi Arabia has been the pillar of stability in the region, also with Egypt, but it's really because of their deep relationship with the United States. That relationship has waned, but given the current political climate, the United States actually needs to see a return of Saudi Arabia in the region, and the Crown Prince could be leveraging that need to get what he wants for his country, but also speaking in the terms that actually impress President Trump. And so they both stand to gain from this in their own respective areas, but it could be a repositioning of Saudi Arabia as an increased power player in the region, where in the past few years, we've seen countries like Qatar and Turkey increase their footprint, and Saudi Arabia is really returning to the fold in that regard. And President Trump can help it and deliver.
Do you get the sense that then President Trump may actually be able to separate the issues of normalization with Israel, the Palestinian cause, from some of the other priorities that you were just listing now? Is he capable of compartmentalizing?
So there's so many issues on the table that also include the de-dollarization happening in terms of oil. President Trump thinks everything is transactional, that everything is like a New York City real estate deal. And if I can get what I want, I can give a little bit of leverage. These are all interconnected, and they're tied to long-term regional stability. And so normalization for President Trump perhaps is really about a return to the relationship being on economic deals in the region rather than political stability in the region. The Crown Prince, but now is in a place to leverage what President Trump wants, and in the language that the Crown Prince has been using in the past couple of years, moving closer to China and Russia even, puts him in a position where President Trump is going to be willing to, in his terms, negotiate more in this transactional manner that President Trump entertains foreign leaders in. Crown Prince is coming as head of government, not head of state.
Yeah. Okay, looks like we've lost the connection with Dalia Fahmy. Anyway, she was rounding up what she was saying there. Really fascinating discussion. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Thank you. Now for a look at some of the other stories we're following. Israeli Prime Minister Benjamin Netanyahu has said there will be no Palestinian state and that Hamas will be disarmed by force if necessary. The U.S. is seeking UN Security Council approval for a Gaza plan that anticipates Palestinian statehood with a multinational stabilization force to demilitarize Gaza. Lebanon's president has asked the country's foreign minister to work on filing a complaint against Israel for building a wall inside Lebanese territory. The AP reports United Nations peacekeepers say the wall renders more than 4,000 square meters of Lebanese territory inaccessible to the Lebanese people. The Israeli military said the wall is part of a broader plan for reinforcements along the border and does not cross the blue line, which is the boundary between Lebanon and Israel. Iran's foreign minister says Tehran is no longer enriching uranium at any site in the country, in a signal to the West that it remains open to potential negotiations over its atomic program. Foreign Minister Abbas Araghchi offered the most direct response yet from the Iranian government regarding its nuclear program, following Israel and the United States bombing of its enrichment sites in June during a 12-day war. And coming up, S&P cites South Africa's improving economic outlook as it lifts the country's credit rating for the first time in 2 decades. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. S&P Global Ratings has lifted South Africa's credit rating for the first time since 2005, citing the nation's improving growth and fiscal trajectory. The company upgraded its assessment by 1 level to BB, so double B, 2 steps below investment grade. S&P said it retained its positive outlook on the nation as there is potential for further improvement in fiscal metrics. For more, we can head to Johannesburg to speak to Jennifer Zabazaja, our chief Africa correspondent. Jen, towards the end of last week, we were talking, you and I, covering the South African budget and the fact that the fiscal consolidation plans were actually a positive for investors. It seems to be the case that it's also positive for S&P as well, the rating agency. So what did we hear from them?
Absolutely, Jumana. And many people were waiting to see whether or not a lot of these decisions by the government was actually going to be reflected in the decision by S&P. And it seems like there is, largely, based on exactly what you were just saying there in the intro. And many analysts are pointing to the fact that there's even so much as a positive tilt, perhaps, based on this assessment. So this is the first time that the S&P is upgrading South Africa in just about 2 years. And they're pointing to a lot of the fiscal reforms that we have seen from this coalition government. And so there is expected to be a higher than anticipated revenue collection from the government. Not just that, there even is the possibility of stronger growth despite some of the trade and the tariff headwinds that South Africa has been facing. And we've covered quite substantively on the show, as you know. And perhaps what is most important to this upgrade that S&P pointed to is the fact that Eskom, which is the state-owned utility provider here, is performing better than expected, requiring less of the government revenues. And so they see a lot more positive room moving forward for the government. And there are still some headwinds that they do point to. But the fact that they are giving this upgrade to South Africa is really a welcome sign for many investors and analysts that pay close attention to this economy. Now the question will be whether or not other ratings agencies will follow.
Yeah, and also I think it comes as a bit of a surprise to the finance minister over the weekend. He was saying he wasn't expecting an upgrade either. So it's all positive, I guess, and one of the very few countries this year that actually has been upgraded. South African assets have had a good run up this year. Does this just add more fuel to the fire? Does this accelerate the speed of perhaps international curiosity in South Africa?
Jumana, what the finance minister said is interesting because a lot of the analysts that we speak to, even you and I were speaking to Dalia Fahmy just a few days ago from Deutsche Bank, who was really saying it was a bit of a coin toss, right? But a lot of analysts were pointing to the fact that there has been quite consistent reforms for the government. So hopefully, many of them were hoping that this would be reflected in the upgrade. As far as a turning point goes for the economy, it's seeming like there is a bit of positivity and momentum moving forward for South Africa, which is very good considering a lot of what we've covered on the show quite a few times. Not just from the power perspective, we've also seen a number of positive signs as far as outperforming budget and output for this economy than initially anticipated earlier this year. And yet there are still a number of issues that the government needs to face and is still contending with. There's corruption, of course, which we talk about quite consistently consistently, there are still some infrastructure setbacks as far as power goes and the ports and rail sectors, which are very important to this economy. This country is still also punching below its weight, I think, is what we can say, especially if you look at the unemployment numbers. Unemployment is still one of the highest in the world at just about 31.9%. So there are still quite a lot of issues that South Africa has to face. But perhaps, you know, what I've been noticing in a lot of the discussions that I've been having is perhaps this does, as you were just pointing out there, add a bit of fuel to the fire, perhaps improve investor sentiment and give a bit of positivity to an economy that has really been struggling for quite some time on a number of fronts. We still need to see growth pick up, and a lot of the economic reforms that the government of national unity have committed to need to move quite faster, and that's what economists that we speak to say. But still, the fact that, again, we are seeing an upgrade seems like a bit of a vote of confidence based on at least the past 18 months of what we've seen from this government.
Jen, thank you so much. Bloomberg's Jennifer Zawazaja. Now, ahead of this week's G20 meetings, Bloomberg is hosting global business leaders and policymakers in Johannesburg, which is where Jen was at, to discuss how global investors are assessing, I should say, the continent's biggest opportunities and risks at our inaugural Africa Business Summit. And Jennifer will be hosting an audio live Q&A on Bloomberg.com later today. Digital subscribers and terminal clients can put their questions directly to a panel of Bloomberg experts in real time. Visit Bloomberg.com/liveqa for more details. And coming up, Senegal dollar bonds rose after the IMF said it's working towards finalizing an updated debt sustainability analysis, which is a key stepping stone to a new program with the Washington lender. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Well, Senegalese dollar bonds rose after the IMF said it's working towards finalizing an updated debt sustainability analysis, which is a key stepping stone to a new program with the Washington lender. The bonds had recently fallen on delays in securing a new IMF program, fears of restructuring, and political division within the government. For more, Bloomberg's Ndiro Ganga joins us now from Kigali, Rwanda. Well, keeping an eye on, one of their active bonds, the Senegal 28 bonds. Now, just a couple of weeks ago, they were trading up at 85, then got as low as around 73. But this news over the weekend, has it been a positive catalyst? We're back to 75 again. I guess the question is this rally sustainable in these bonds?
Good morning, Jumana. That is the golden question. But if you look at the statement that IMF put out, the debt sustainability analysis, it's key for IMF deciding whether they're going to give Senegal a new program or not. And because the news was in the affirmative, it's been sort of a sigh of relief for the market. And we've seen some rebound. The 2048 bond gained for the first time in 6 days by 4.8%. The 2031 bond also gained by about 3.2%. And this is good news for the country because last week we saw the bonds weakening after IMF left the country without concluding on an agreement on when the country is going to get a new deal. And the genesis of all this goes back to a $7 billion debt that was discovered by the new administration. And as a result, the IMF paused their $1.8 billion program in the country. And that's where we began to see this downward trajectory with Senegalese bonds. And so if you look at the charts in the last couple of weeks, what you see are dips and rebounds. And this signals investor anxiety. Last week, the probability of a default was being priced in. The cost of insurance in case of debt default doubled. And these bonds are trading at distress levels. The IMF says they've given the country various solutions on how to go about this, but only Senegal will decide how to deal with their debt vulnerabilities. The country has ruled out restructuring, and they're saying they're going to continue honoring their debt obligations. But currently, as is, their debt to GDP is 132%. Borrowing costs are high. 2/3 of their debt is external. And so that exposes them to a lot of risk. And Bloomberg economist Yvonne Mhango says a tough road lies ahead. First of all, they will have to increase their surplus by 2%, and investors will have to contend with a haircut.
Okay, but one of the other risks is growing political division. Could that also threaten the recovery in the bond price action?
Absolutely, because now debt crisis has taken a backseat and political crisis is now at the forefront. We're seeing division now playing out publicly between the President, Bassirou Diomaye Faye, and his Prime Minister, Ousmane Sonko. And this is because of party leadership. And the President says this division within the party, he's replaced a Sonko ally. And Sonko has come out and say he doesn't support this decision. The IMF is concerned about this because if there's no political cohesion, then the government won't have enough backing to initiate and implement the painful reforms that are needed for this country to get back to a level where their debt is sustainable and they can spur growth again.
Ondiro, thank you so much. Bloomberg's Ondiro Aganga. Thank you. Okay, a look at equity futures as we head into the first trading day of the week. We had a bit of a seesaw day on Friday, lackluster for Wall Street, but negative for European markets. And you can see today things are looking up. S&P futures up 0.4, NASDAQ up 0.6%. All eyes on NVIDIA earnings that come through on Wednesday. European markets look like they're set to continue with their declines. We saw heavy declines on Friday. Today, futures looking to open about 0.1% weaker as well. So big week coming up. Remember, we've got NFP data coming up on Thursday too. That will be a big focus for investors, and NVIDIA earnings on Wednesday. That was it for Horizons Middle East and Africa. I'm Johannesburg in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.